This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. It's Friday again. Alan, comes around all too quick, doesn't it? But you can set your clock by the podcast we do every Friday. I think it's something that I look forward to every week, but it does seem to come around quicker and quicker. But how are you doing?
I'm fine, thanks, Mark. Yeah, and you're absolutely right. It comes around in no time at all. I can't believe we're sitting here now and a week has elapsed, and what started out as a quiet week filled up en route. So yesterday was, I had nothing in the diary, and then by about 10 o'clock I was working flat out on two announcements, and on it went, and that just seems to be the way things are at the moment. But yeah, Friday's here, so hoping to be able to switch off this afternoon and have a slightly extended weekend. But of course, something will probably happen after lunch, as it usually does.
Anyway, so today we're going to cover a new company who I interviewed, I think about a week ago. They're IPOing soon, all being well. That's Georgina Energy in helium and hydrogen and natural gas. They're coming onto market fairly soon. So I'm keen to get your research thoughts on Georgina. And then Bidstack as well, who we have spoken about before a few times, but you said they're at quite an interesting sort of juncture in their journey. So let's get a bit of an update on Bidstack as well. But Georgina Energy, first of all, so hydrogen, helium, not very many plays out there. What's the deal with Georgina Energy, Alan?
This is a fascinating opportunity, and I think anyone looking to add to their pre-IPO portfolios at this stage of the year needs to take a long, hard look at Georgina. The company caught my interest because unlike so many, and Mark, of course, we talk every week about mining and exploration companies and companies exploring for resources. And then you come across companies that have existing assets which need to be reactivated, recommissioned, and it's with those companies that there's a lot of nascent value in the asset already, and also some great potential upside. But I think in the case of this particular company, Georgina Energy, there is a direct comparison with a listed entity out there that simply is compelling, and I'll get to that shortly. So Georgina Energy are raising £3 million, raised £3 million in a listing on AIM early in 2023 at 2p with a half warrant with every share for people participating in the pre-IPO. They're coming to market with an £8.5 million market cap, and this seems to be a bit of a magic number for IPOs at the moment. If we look at the success that First Class Metals had last year with coming to market with a similar number, I think it was slightly lower, actually, $6.5 million. But this is a very modestly valued company. But unlike First Class Metals that came to market with a set of packages that were exploratory packages, this is almost a plug and play opportunity. So Georgina Energy is a well redevelopment company with two key assets in Australia, and these assets are helium, hydrogen, and natural gas production assets. So the assets they own, there's exploration or EPA 0186, which is the Hussar assets, and this is in Central Australia, and also EP 155 Mount Winter, which is in the Amadeus Basin in Central Australia. And if Mount Winter sounds familiar, it's, of course, we have spoken before about Mosman Oil and Gas that are majority owners of the Mount Winter asset. So these two assets have been drilled previously. So I'm going to go through each of them first of all. But before I do that, I'm going to just look quickly at the company and also the people involved with the company. I spoke yesterday with the chief exec, Tony Hamilton, who's managing partner of West Market Capital, and the company West Market is the operating company, or West Market Oil and Gas Pty Limited is the operating company in Australia that operates both the Hussar and the Mount Winter projects. Tony Hamilton's experience, he was a chief executive of an oil and gas company in Texas, USA, and has been involved in the oil and gas industry for many, many years, over 35 years of experience in businesses, from investment advisory to oil and gas, gold, diamonds, base metals, and so on. The company also has as exec technical director on the board a gentleman by the name of John Hugh, and John Hugh is well known and well respected. He's been a real driver of this particular sector. Masses of experience in oil and gas exploration geology, including well site geology, project operational work, engineering support. He was a founding director and MD for 15 years of Central Petroleum in Australia, so biggest acreage holder in Australia of exploration territory, some 70 million acres, and also has extensive experience in exploring for helium and also identifying targets. Also with PetroAfrica Oil and Gas, Griffin Mining Energy, and so on. And he has overseen well over $500 million of joint venture expenditure potential. So he's a veteran. He's well respected and very well known throughout the industry. Finance director is Mark Wallace, who is managing partner at Westmarket Capital, and has many years' experience working with investment banks, including Standard Chartered Capital Markets, Cantor Fitzgerald, Credit Lyonnais, and others. And then we also have Dean Golokin, who's a chartered accountant with many years' experience working at Rio Tinto and BHP Billiton, and also Sam Quinn of Silvertree Partners. I've known Sam personally for a number of years, and he's involved with a number of other companies that are well known. One in particular, Blencowe Resources, listeners will be very familiar with. So that's the board of the company, and the two key assets, as I say, are Hussar and Mount Winter. Now, the Mount Hussar is owned 100%. They have 100. Georgina has 100% working interest via its Australian company, Westmarket Oil and Gas. Now, this was drilled in 1982 down to just over 2,000 meters. Gas flows and oil shows from that drilling campaign then pointed to a helium reservoir, but of course back then helium wasn't as important. But it's within the Officer Basin and is viewed as one of the most potentially lucrative resource basins in the Asia Pacific region. Seismically, it's well proven too. And it is intended that that once the company is listed, then the funds raised will go directly into a drilling campaign where they will drill a further 1,100 meters and tap into a huge resource of helium and hydrogen and natural gas. The second project is Mount Winter. I've already mentioned Mosman Oil and Gas in the Amadeus Basin, and Westmarket has, via Georgina, rights to earn up to a 70% working interest. And again, previously Mount Winter was drilled to 2,600 meters, penetrated what's called in geological terms a subsalt heavy tree layer, and there was a helium, hydrogen, and natural gas reservoir was identified underneath. Now, of course, in these salt caverns basically are gas tight, so they are the containers for these huge resources. And again, the drilling that's required there will be something like a further 750 meters to get into that reservoir. So hugely exciting. Now, across both of these assets, the helium, hydrogen, natural gas is thought to be 303 billion cubic feet of unrisked P50 helium gas, 308 billion cubic feet of hydrogen, 2.95 trillion cubic feet of natural gas. And basically, it's not like drilling for the first time. This is why Georgina are a well redevelopment company. They're literally going to these sites, unscrewing the plug, and then continuing drilling down existing drill holes. So this is hugely exciting, and they've waited until really the market has come to them. Helium, of course, has a multitude of applications, both in medical, nuclear technology, space, defense, and there are all sorts of applications. There's a huge shortage, and the helium price per billion cubic feet has shot up in recent years, and there is a shortage. Australia is recognised as potentially one of the biggest contributors. At Darwin, there is Linde, the huge chemical manufacturing company. Linde have a huge helium refinery based there. So the technology required to support these assets is relatively close in terms of accessing equipment. There are also liquid natural gas plants in Darwin, also on the west coast, and the Australian government have invested a huge amount, and will be investing a huge amount into infrastructure, which will include pipelines that will be running between the Officer Basin and the Amadeus Basin. So there will be in future an asset to tap right into. But the reason that Georgina is such an attractive investment opportunity, to my mind, also is that there is no requirement for the company to spend any more other than the drilling campaign to prove the asset is there, and then the gas effectively will be sold at the wellhead. So at that point, they'll be able to forge partnerships with other players in the market to extract the gas, get the gas to market. And there's also an opportunity too, given the presence of these salt caverns, as it were, to use the natural gas to power a gas separation plant. The carbon dioxide that's produced from that can, of course, be stored in those salt caverns. So there is the potential for this opportunity to become a carbon neutral asset, and that, of course, in this day and age, will be a hugely important step for the company. So in terms of its numbers, of course, what we need to do is to look at the other players out there in the market to get some idea of where the valuation lies. And there's a company called DW Research that's provided a very detailed research note on the investment opportunity. Goes into a lot of detail about hydrogen and helium and its applications, which I think are generally understood. But there's also a very important comparison to helium-1. Of course, He1 is the epi code. Helium-1 is based in Tanzania, which is viewed as a high-risk jurisdiction in comparison, certainly, to Australia, which is the lowest jurisdiction. Currently, Helium-1 shares are trading at 5.3p, giving a market capitalization of about 44 million. Georgina Energy are coming to market with a market capitalization initially of 8.5 million. So it's Helium-1 is trading at many times the IPO market cap of Georgina. But what is more interesting is the direct comparison, the back-to-back comparison. In the case of Georgina Energy, you've got two defined sources of helium, hydrogen, and natural gas. The Tanzania asset is not defined. The unrisked helium that Helium-1 is able to tap into is something like 138 billion cubic feet, compared to the unrisked helium that is on offer from Georgina Energy. Georgina Energy already has two seismically defined targets with wells pre-drilled, so it's literally a case of putting the rods down the existing well and continuing that drill using these existing four holes that are there. and there's also very advanced infrastructure in place around both the Officer and the Amadeus basins in regard to road, rail, pipelines, processing plants, and so on. The production status, of course, is near term. I've explained the process they need to go through. There's no need to build a huge infrastructure at the top of each well because it will literally be sold at the wellhead. So this is a hugely compelling investment proposition. And certainly, if we look at the share price performance of Helium One, there's been a gradual decline in keeping with a lot of mining and resource companies over the past year, but that market cap has held up pretty well, I think. So I think in terms of comparison, the DW have published their own thoughts on their valuation, basically using peer group comparative methodology, and they've got a base case valuation of 127 million sterling to Georgina Energy on the basis of its unrisked or 2U prospective recoverable resources of helium. And if you add in the hydrogen and natural gas, then that could be an awful lot higher. So this is a very extremely modestly priced IPO, and I think there's every reason for investors to get very excited about this. Just some other points to bring to your attention too. This isn't a new company. Georgina Energy was established as a UK private limited company in 2019. So you can actually go and check them out at Companies House. The founders of the company, the directors, raised 1.2 million initially amongst themselves, and have since raised between them a further 430,000 in working capital. So they've funded the company thus far. They've got the opportunity to this point. They're now raising the money to come to market. And when they come to market, speaking to Tony, there is going to be an avalanche of news. We saw it with First Class Metals, and I'm sure we're going to see the same from Georgina Energy too. There's going to be news announcement after news announcement, developments at the well. And I think looking at what the company have to do, they've got to get the drill rigs on site. Now, the pressurized rigs that are required to drill these holes are just 5 days drive away in Darwin. So as soon as the funds are in, those rigs will start their journey south. There is already a memorandum of understanding in place with Harlequin Energy. So they already have a takeoff deal in place before they come to market. And they've got infrastructure galore around them, which they can tap into as they need to. So in summary, I think the best place for investors wanting to know more about this, obviously after listening to this, there are two things you should do. Firstly, check out Georgina Energy at Companies House. Everything you'll need to know about the company and the directors is there. Secondly, the Georgina Energy DW research note, which was published on 11th of January. You can Google this and find it. If you can't find it, then come through to myself or Mark and we'll provide it to you. And that will tell you all you need to know. But just remember these numbers again. DW have a conservative base case valuation of 127 million for Georgina, and Georgina is floating at a market capitalization of just 8.5 million.
Excellent. Very nice summary, Alan. Thank you very much. It's very key that research note is very good. It's not too long. It's probably I don't know, sort of 10-ish pages or just over 10 pages. It's not ridiculously long. It's not doesn't go into too much. It's not a difficult reading, is what I'm saying. It makes very, very easy reading. And I did do an interview with Tony last week, which can be found as well on the Stockbox YouTube channel there, where we talk really generally about the company, but also we go into some of the things on this research note. And that table there where it compares here Georgina to Helium One is compelling. Really, that really sets out where their valuation is coming from. Lots of different things there, as you covered. I mean, on the front page of that research note, I don't know if you noticed, but Tony didn't like to comment on this, and understandably as CEO, but the research note refers to an in situ value of $102 billion US. Now, it is a bit early to be talking about those kind of figures there. I think let's let them get IPO'd and get those wells uncapped and see what's there, then we can start talking about in situ values. But even if you take that 127 million valuation based off the comparable helium-1, then already there's huge upside there, considering they are listing at 8.5 million. And as you said, they've put a lot of money into it, haven't they? That's their own money, a lot of that from 2019.
It is,
both of them to get this over, to keep this project going, get it over the line. So credit to them. And there's not many plays, as I said at the start, in this space, helium and hydrogen. And
No,
who'd
this
have
is,
known the uses of that as well? Like you said, you mentioned at the start there, Elon Musk, I think, apparently said it was one of the most valuable, helium was one of the most valuable gases for the space exploration.
it is, yeah. It's well. There was I was reading a note by SkyQuest Technology which was out late last year, and it's one of the rarest elements on Earth, and the price and demand has increased because of new technologies. So 3D printing, and thermoplastic, and there's such a raft of applications for helium, and yet you've got the supply problem, and that's why the price is going through the roof.
Yeah.
Australia is always already recognised as a key supplier. As I say, Linde, the chemical giant, has a processing plant there at Darwin, but really, when you've got a plug, or shall I say, an unplug and play opportunity like this, it's quite unique. And I think what I like particularly is that they have priced the IPO very modestly in order that shareholders can really participate in what I think is going to be a huge uplift. Because unlike so many companies coming to market, this is going to come to market and it's going to be generating cash from the sales of helium in fairly short order. We've not got to wait years and years for a discovery to materialize and for samples to indicate that there is a huge body of ore down there under the ground. This is already there. What they've got to do is just basically drop the drill rods down the existing holes and carry on drilling.
Indeed. It's nice when these opportunities come along, isn't it?
Yeah.
So thank you for telling us about that, Alan. Excellent. Okay, well, let's move on then to something completely different. So we're going to talk about Bidstack, Alan, and bring us up to speed on what's going on there.
Yeah, Bidstack is a fascinating company. Obviously, if you're in the world of gaming and you're keen on gaming, you'll no doubt be aware of the technology that the company offers. The global gaming market is absolutely huge, as I'm sure we can imagine. Of course, if you're an advertising agency, you're going to a brand like Coca-Cola, and you can tell Coca-Cola where you can go across the TV. You can go via posters, you can go online. But of course, hitherto, the world of gaming has always been very difficult, because if you buy an off-the-shelf game, then you're buying it as it stands there and then. And of course, with the ads that, if you're buying a football game, for instance, you'll see the ad hoardings on the side that may be relevant for that particular year. If you're playing a live game, of course, you'll see the same thing. But once Bidstack came along, they started building in their technology, which serves. So just as if you're watching a streaming TV channel, if you're watching Netflix, and you'll be seeing ads that are tailored to your profile and to who you are, Bidstack have developed a proprietary technology and platform that does exactly the same for gamers. And this is a market that's estimated to be worth some 250 odd billion by 2025. It's absolutely huge. And just as this market develops, of course, the gamers that were engaged in their teens are now in their mid-30s and their 40s. So it's a growing, changing audience. And advertising agencies have recognized that this market is hugely important, and they have a unique opportunity to get their brand in mid-gameplay. So it's hugely important. So Bidstack have developed this technology. James Draper is the chief executive. He's a big shareholder in the company, as you'd expect, and founder. And it's a bit like a who's who of gaming. So I'm not going to go into all the people that are involved in the company, but there are some key people that have come from the gaming industry who are engaged with the group. Bidstack disappointed a few years ago. It projected that it was going to write more revenue than it did, and as a result of that, there was quite a collapse in the share price. In fact, if you look at the share price performance over the past 5 years, you'll see back in 2019, shares were hitting peaks. I think intraday peak was about 40p at one point, but it's come back, and then of course it's been trading really around the 4 to 5p mark, and then more recently there was a fundraising that took place. The company raised £10 million in October last year at 2.85p. So the company has a market capitalization now of 22 million. Now, it has taken a series of steps, and when you're developing a technology like this, of course, that technology has to be validated, and it also has to be able to provide an interface to the account managers so they can go in and see how the ROI is performing. And this process has undergone many independent assessments, and independent organizations have gone through and verified the technology. So it's fit for purpose, and it's providing the agencies using the platform so they can demonstrate to their clients, so they can see and extract an accurate picture of ROI and how that's progressing. So as the company's gone forward, the revenues have started to grow. In last year, the company announced interims 30th of August, revenues of just over 2 million, up from 820,000 the previous year. The margin improved to nearly 40% from 34% previously. So the company has been announcing a series of new deals with organizations like Sports Interactive. Of course, it had a contract extension announced in August. And then at the end of August last year, the Internet Advertising Bureau, a collaboration with the IAB, basically bought or marked down Bidstack as the standard for in-game ads. So the technology has really come of age now. That's the benchmark to which other companies aspire to, and there are other competitors. One is listed. One is a private company, but Bidstack have very much been first to market, and as such, they're evolving and developing their technology in line with the new opportunities that we're seeing in gaming. So, as I mentioned earlier, we then get to October, and the company announces a raise of 10 million at 2.85p. Also, a cybersecurity company, Dato, took part in that fundraising and invested 5 million. So that was hugely significant because, of course, with this multitude of gaming platforms that people are engaged in, the cybersecurity is ever important. So Dato are now a significant shareholder in the group going forward. In December, of course, it announced 2 new gaming titles with AAA gaming publisher, and the company now has a network of premium developers and publishers with over 250 titles across in-game, in-menu, and of course rewarded video. But the company ran into problems with an ad publishing partner called Azerion last year, and Azerion and Bidstack were working together to access Azerion's European network of clients and gaming companies, and Azerion basically went to cancel the contract, and Bidstack have taken Azerion to court, and a full hearing will take place in Amsterdam on the merits of the case, and the claims against Azerion will be heard late Q3 this year. So that's got some time to go. But the important thing is that whilst this is going on in the background, Bidstack continues to sign up new clients. It gave a financial update on its performance earlier this week. Unaudited revenues for full year 2022 up 103% to 5.3 million. That's 2.6 up from 2.6 million last year. Gross margins are now 70%, up from, you remember I said was 39.9% or 40% last summer, now 70%. And the group now has a cash balance following the raising of 8.7 million as at December. Looking forward, the group are very, very confident about expanding in 2023. They have numerous partnerships. They have resellers, MMP worldwide, that's across globally, ad scholars in India, totally awesome in the Asia Pacific market, TNK factory in South Korea, Omega Media in Vietnam, and they've got a huge presence in the US markets, and they've recruited 2 former Ad Colony representatives, and they have a specialist team of 10 people now working solely on the US. They've got a partnership with Unity Verified Solutions. I've already mentioned the IAB, the Internet Advertising Bureau, and also mobile ad tech company Adways and metaverse franchise Simwin Sports have used Bidstack technology successfully. The company's already got 1.2 million revenue booked for Q1 2023, typically the smallest quarter of the year. And there is every sign that we'll see, I say an avalanche, certainly a raft of new signings, new clients that will sort of materialize in the next quarter. If you look back at the series of announcements that have been made by Bidstack in terms of new contract wins, this is very much it's growing rapidly and exponentially. James Draper said earlier this week that in 2022, Bidstack achieved operational growth. The business is aiming for a $100 million revenue opportunity over the next 3 to 5 years. So I think, despite the fact that Bidstack has had its problems in bringing the technology to market, and this problem now with Azerion, that's actually a bit of a red herring. I don't think the Azerion court case is material to Bidstack going forward at all. And I know Bidstack's got a big following on the internet and also across Twitter. And I'm certain I'm going to hear, once this goes out, from the Twitter article following Bidstack in particular. But there are so many things to be excited about for this company. I think it's set for exponential growth. And I think with most of its development and validation behind it now, I think the company is, for the first time in its history, in a position to really deliver exponential growth. And if we get to $100 million within 3 to 5 years, then given the current market capitalization that Bidstack has and the sector it's in, I think it's currently looking woefully undervalued.
Oh, well, thank you for that, Alan. And of course, as you said there, it's gradually been increasing revenues, hasn't it? So, I mean, you're always going to get these kind of problems. I mean, technology, but when you first told me about this, it must have been, I don't know, possibly 2 years ago even, we first spoke about Bidstack. I was really impressed with the technology there and how it's able to do what it's doing. You're not going to have that without any kind of teething problems, aren't you? It's there's the sheer complexity of that technology. But it's good to hear that they have been steadily increasing revenues, and you're still very, very bullish on the case there, looking to increase revenues. What do you say to what was the figure you gave?
Well, the company unaudited revenues for the last financial year just gone up 103% to 5.3 million. But James Draper said that the company is aiming for a 100 million revenue opportunity over the next 3 to 5 years. So I think we're going to see exponential growth year on year now, and it's likely the company will need to raise further money to run, because there are a team of developers and a team of people working to grow and market the business. And of course, as the gaming platforms evolve, so Bidstack's technology will need to evolve. But the important thing is the IAB have recognized them as the standard. They're the benchmark standard within the industry now, and that's hugely important because it means that it's the go-to solution. And when you think about the multitude of gaming platforms out there, the opportunities to serve live ads into all of those platforms, it's immense. And also with that, of course, they've got the technology to accurately show the target audience that are viewing the advertising, viewing the brand, and of course reporting back on that too.
Yeah, excellent. Okay, well, thank you very much, Alan, for talking to us there about Georgina Energy IPOing hopefully soon in the next month or so, and bringing us up to speed on Bidstack. And I wish you a very pleasant weekend, and let's speak again next week.
Thanks, Mark. Yep, look forward to it.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.